Welcome back to Third and Three, the show where three longtime friends break down the real stuff. Life in the second half, money that actually makes sense, purpose that actually matters, and of course, Colorado sports that breaks our hearts and resurrects them every few weeks. I'm Chad Nelson, and with me are the usual partners in questionable judgment, Kurt, our in-house financial truth teller, and Mark, the philosopher king of the 1,000-week chapter. Here's what is on our docket for today. We're kicking things off with something that's rattled the markets and every AI investor's stomach. The recent pullback in the tech and AI sector, what's caused it, what it means, and whether this is a bubble popping or just a reset. That's where I'm headed out of the gate. Then Kurt's taking us through the financial corner where he's asking the big question, should you fire your financial advisor and manage your own portfolio? He's got the pros, the cons, and some eye-opening numbers. And after that, Mark's going to lift us out of the spreadsheets and into the bigger picture with On Your Mark, how you stay energized, connected, and purposeful in the years that matter most. And finally, we're headed to Boulder for our Colorado Sports Deep Dive, looking at Coach Prime and the CU Buffs and asking the real question, can you build a culture when your roster changes every single year? So, guys, I'm gonna kick it off with our first segment, the AI pullback. As we've all sort of experienced over the last couple of weeks, stocks have plummeted, particularly those stocks that we thought from a revenue standpoint were killing it this year. And I'm talking about NVIDIA, Tesla, Palantir, Google, Meta, the usual suspects. And obviously there's been a serious pullback in the last week. And what I'd love to talk to you guys about is, what do you think? What do you think this is? Do you think it's a AI bubble popping and things are like permanently pulling back to a realistic number, that this whole thing has been a facade? Or do you think that this is just a blip and things are going to continue to ramp up, that we're in inning one of what's going to be just a huge AI boom for months, maybe years to come? So, guys, give me your take on it.
Well, I think
Mark?
both can be true, actually.
Yeah.
Actually, I think we are in the early innings. The thing is, we don't know what teams are going to be in the final innings. If you look back at the internet boom, I mean, you had all the CLEX and ILEX and, WorldCom and Global Crossing and
Right.
all these companies that literally just faded, whether it was Nortel, there's everybody that was huge back then. The only one that really made it out of that was at the lead was Cisco. And Cisco just got back to what they were worth 25 years ago. Last week, they were within $2 of their stock price from 2001. So
that's amazing.
If you look at it, it took them 25 years to get back to $82. And that's incredible, because I had friends at Cisco that had stock at that price, and they've been underwater on those stocks ever since. So that's.
But it's all upside from here.
Now. That's where we're at.
All up.
It's the same thing. I mean, I think who's going to win? I don't know. I think Google's in a lead. It seems like right now. But a year ago they were not in the lead. Bard looked stupid. Gemini 3 looks great.
So Belch, let me ask you this, because obviously when you look at all the companies in the dot-com boom, most of them were brand new. Like they had never had real revenue. You're talking now with AI about literally the top companies are all, except for maybe Palantir. Palantir is relatively new to the big leagues. And you could say maybe
15
Tesla
years
is
old. Yeah.
But like Google, Meta, Amazon, these are all companies that have crushed it for decades.
Yes.
And so.
And they actually have PE ratios, whereas all the companies I named, I'm sure Cisco's was like 200 at the time, but that was fairly real. But all the other ones they didn't have a PE. I mean, literally.
Right. Exactly.
They had
You
no
have to have
earnings.
E.
Right.
Yeah.
You don't have E,
So,
it's tough to have a P.
yeah. So, right. So, are we talking apples to apples? Like, is this setback?
But we don't know who's going to come out the other side. I do think, I mean, all those companies, I mean, they're all gigantic and they're all going to win,
Right.
I think. I think the Core Weaves or the Oklo for, for SMR, for small modular reactors, that kind of stuff, we have no idea who's going to win.
Big question
mark. It's probably worth, and same with quantum. We don't know if NVIDIA is going to be the winner. All that stuff is up in the air, and it's really interesting. And you just make little bets on a lot of them, is my guess.
All right.
But so, Chad, when you mention those companies, I mean, Google's got a almost normal tech PE of 31.
Okay.
NVIDIA's got because their earnings have been fantastic, but their PE is still 45.
Yeah.
Right. Palantir's is 371.
Yeah.
Tesla's is 285. So, I mean, these are still gargantuan PE numbers.
Yeah. No, right. But are we in the middle, in the first inning of something that's going to be worth tens of trillions, if not hundreds of trillions of dollars at some point? And so, is the opportunity insanely ripe? I guess I'm as much as that, like, thinking about the last couple of weeks. Is this something in your minds that's systemic and it's like, this should happen because stuff was so overinflated? Or is this just a blip and it's just people profit taking before the end of the year? So analyst numbers look good, but it's the beginning still of this insane uptick.
Yes, I think it was profit taking. And I do think there's some credit factors in the economy. Obviously, inflation is going up again and unemployment is rising for sure. And the Fed looks like they're going to cut and they're going to start, throwing money into the economy again. So all those things could help. But I mean, the economy in and of itself is a little tenuous at the moment. So I can see people getting a little freaked out about whether it can carry, you have 7 companies carrying the entire S&P 500 and everybody's like, is the economy good enough to do that? And you look at the shadow financing and the credit, you see auto loan, there's a lot more people that are defaulting on loans now and student loan default. Well, you can't default, but the payments are, slow again. Yeah. So, I mean, there's a lot going on in the credit market, but the consumer seems strong. So go figure it out.
No, that's a great point. There is a lot of negative things. Unemployment seems to be rising, and AI may continue to absorb jobs, and so that puts people in a tough spot. And so, does this consumer spending last? Because at some level, if no one, or if a decent percentage of people don't have jobs, what does that do to the economy? And so, that's it's made me really reflect on all those aspects when I think about what is AI doing? Where is it? Is it the beginning of something amazing, or is it creating disaster because of some people would say, hey, look, there's so much borrowing going on, even from the Max, 7, that they'll never be able to repay these loans. Like, they're just borrowing money, like the .com boom when they went out and invested in infrastructure, and there's no ROI on this thing. They're not going to make back the money that they're spending. So, anyways, there's a series of dynamics. I even think about the NVIDIA trading that's happened. Why, when NVIDIA not only crushed its numbers, but had an outlook that was insane, and the stock continues to lose value. And what is that? Is that because, I don't know, thoughts about?
Well, but I think it's all relative too. And it might be part of our problem is having too much time in retirement to absorb all this all day. But NVIDIA, I mean, has a PE of 45.
Right.
And when I was looking at it yesterday, it's like, wow, those last week was really painful. And then I went back and looked at my portfolio and when's the last time it was when it got to that as its peak, and it was like a month and a half ago. So it's been
Correct.
really frothy,
Yes.
and an occasional jerk on the fishing pole sinks the hook.
Yeah.
Yeah.
Yeah. Yeah.
So
That's
it,
true.
it is going to go up and down.
Yeah.
There
Yeah.
will be a correction. I don't know when, but there
Right.
certainly will be. Yeah.
Right.
And
I
winners
would
will be
stay in.
declared. I mean, Palantir looks great until they
Yeah.
don't, right? Until they become Nortel.
Right. Yeah.
And then they won't. And somebody else will look great.
Yeah.
Yeah, yeah,
And
yeah.
do the juggernauts of yesteryear, EY and Accenture and, all those guys, do they jump in and be as good as Palantir? Right now, it appears Palantir is head and shoulders above everybody in delivering services around AI.
Right. But that
But I
won't
thought-
last forever. I mean, people migrate to other companies. They bring
Yes.
the secret sauce. Yeah. Yeah.
And there's
I
a lot
thought
of smart
last week
people
was-
at Deloitte.
I thought last week was extraordinarily tumultuous. And then, Belch, you were the one that told me, hey, these kind of 2% up and downs happened all the time. And it was like, when you sent the statistic, it was like, it works out to once a month, there's a 2% down day.
Yeah.
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 It's like
Lately,
incredible
yeah.
how frequent they are. You
Yeah.
Yeah.
don't think of it in those terms, but
Well, three 20% up years in a row is very abnormal.
Right.
And
Yeah.
It
and
feels kind of
usually-
scary.
Yes.
It feels a little bit like, you know what? Stuff's just not this good. Straight up, like there will be an adjustment. You know, it's
and
just
back to my point about it was this low, air quoting, this low in the middle of October when it was at its all-time high.
Yeah. Good
So in the
point.
middle of October, I
Good
wasn't, thinking, oh my God, the world's ending.
Yeah.
And somehow a month of great returns, and all of a sudden it goes back to a month and a half, and you're like, ah!
No, but Bumps, the fact that, again, we've had 3 years in a row of 20% gains does make you think, like, is this it then? Is this where we kind of go back to reality? That's what makes, like, these, like, pullbacks, you sort of go, oh, this was
Yeah.
overdue for a year and a half or
But
whatever.
where else do you want to put your money other than,
Yeah, exactly. Exactly.
Especially if we're going to keep reducing the interest rate, and all of a sudden your money market and accounts look
Yeah.
like they're back to 2018 where they're making a half
But
of
bonds
a
are
percent.
inverse, so maybe bonds do okay, even though they haven't done anything for a long time.
Yeah, I hope so.
And certainly, I think crypto is a whole nother topic. I mean, we can spend a whole day on that. But
Yeah.
I mean, Bitcoin, yes, a finite number of Bitcoins, so supposedly, it has value, but nobody really buys anything with it. The only people that use it are drug dealers, money launderers, and human traffickers. And I mean, I
got a
just
good
can't
list by
imagine
itself.
it's never going to be the de facto currency. I mean, Solana has way better chance. It's a stable coin, it's tied
Yeah.
to the US dollar, or Ethereum has a lot of apps you can run on it, so it actually has application.
Yeah.
Bitcoin, I don't, it just went from 120 to 80 in 2 months.
Yeah.
I don't know that I want to put my money there.
Right.
I mean, that's
Yeah.
unless
No,
you can pick the right one. If you know which one will win in the end.
Yeah. Right. Bitcoin is a very bizarre thing because in one sense you see the gains and you sort of go, wow, but it is definitely that shiny thing that when history probably will look back on it and go, freaking, like, people got sucked into the gambling vortex.
Oh, 100%. Somebody's going to get left holding the bag. And
Yeah.
I've made money on it, and maybe I'll throw money in again. If I suck it down
Right.
to 60, maybe I'd throw something at it. But
Yeah.
I don't want to be the one caught in the end. That's for sure.
Yeah. No, I hear you. All right, boys. Well, good discussion. So, anyways, the AI dip might be noise. It might be a warning, but either way, it forces us to think about this more, and I think that's great. And speaking of decisions, Kurt has some very strong feelings about whether a financial advisor is worth keeping. So I'm going to push it over to you, Bumps,
All right.
and let the financial corner tell its thing.
So last week we talked about what a outsized role your expenses have to do with your potential success of your retirement and financing your retirement. Today, we're going to talk about what could possibly bring you thousands of dollars per year. And that's by managing your own portfolio instead of paying a certified financial professional to do it. But before I start, let me just make sure everyone's aware that I am not a financial advisor. You should not take this as financial advice. This is stories of our lives and should be viewed as informational only.
Chad, you can pay me $2,000 and I'll do all your training.
No, I will not. I will not take new clients. I will not take any clients. Also, for a deeper dive, shameless plug, you can follow my other YouTube channel, which is called Leveling Up Retirement Now, where I take these topics into a little bit deeper dive than what we discuss here. So before we talk about should you or should you not fire your financial advisor, let's talk about the skills that are necessary in order to do it yourself. First of all, you have to have the intellectual capability. People think that's a tall hurdle. It's not. It's really not. It's math. It's not that tough. But the second one's a little tougher, and you have to have the desire to learn and manage your own stuff. You've got to do. You can't just wing it and let your emotions do it. I mean, that's part of why financial advisors have businesses. Third, you have to have the bandwidth to do it. It's not as bad as you might think, but it's not zero time spent either. And then finally, you have to have the ability to keep your emotions at bay a little bit and not trade stock emotionally.
That's the hard part.
Yeah. And in order to do that, what we've done, the three of us, I think, has done a good job of having a small cohort of friends that you discuss things before you execute. So we bounce ideas of what we might want to be doing with our portfolio off each other all the time. And most of the time, it is met with...
And we're making buckets of money.
Our percentage is 0.0. How do we make money? Volume.
So Bumps, let me ask you this. Like, we've talked about this for years about how much a financial planner is worth, and particularly with the amount of information you have nowadays. I mean, we have just insane amounts of information. Gosh, the one thing I always worry about is that, I feel like my financial planners in the past have had good advice from a tax perspective and in terms of what to sell when.
That's fair.
Yeah.
Well, I'll walk through the pros and cons of them.
Okay. All right.
But you're right. And they have, certain of them are much more skilled. Most of them are much more skilled at asset accumulation and less skilled at the decumulation portion. But some of the pros of financial advisors are it's true outsourcing. You set it and forget it. I mean, that's what they're there to do, is manage it. So, you think about, Chad, our parents, that's what role they play. I mean, Dad didn't want to have to make a decision about finances to save his life.
Yeah.
And so they were great for him. Second pro of financial advisors is that theoretically they have a lot of expertise in what they're doing. Like I just said, I found that they have a lot of expertise in asset accumulation. While you're earning a paycheck, here, give me some of your extra money and we'll go do fun things with it. They're very good at that. A small percentage of them are good at the phase of life we're in now in decumulation. Third, they do offer that emotional barrier to market fluctuations. When you have to call your advisor and say, I'm freaking out because the market went down 4%, that's an excellent reason to have one, is they provide a barrier to, okay, let's not freak out. Let's think this through. What's your money there? When do you need that money? The market goes up and down. Over 8 out of 10 years it goes up. So let's not freak out. And so they do provide a good barrier to emotional trading.
Mm.
And they're an
Yeah, you do.
easy.
You have to ask them to get money too. That's the other thing. Like
Yeah.
if you have your own money, if you want to give yourself a loan, it's very easy. If you have
You're
to
right.
call somebody and ask for it, it's a
Yes.
little harder.
Yeah.
Totally.
You know.
Totally right. Just the formal interaction and barriers create some
Yeah.
make you process what you're doing and what you're
Yeah.
Anyways,
And the last one is that they're a much better transition for typically most couples have one of the two people is very into the finance and the other one is typically not. It's the case in my family. So when I get hit by that proverbial bus, it makes for a much easier transition if the money's already with a professional than if she has to deal with the grief of me getting hit by the bus and have to figure out, I don't know what to do with this money and I don't know who to call to get help. So that's another reason.
You know what's interesting about that is like in our family growing up, Kurt, mom was the one who actually understood where the finances were. My dad,
it's not always the male.
My dad's the one who generated the funds, but my mom's the one who said we should invest this, we should be doing this and that, and like understood the market. What like my dad, it like freaked him out or something. I don't know. Yeah.
So I don't know whether it was wise of him to know where he didn't know so very much and to turn it over to someone that did, or if it was just I want to bury my head in the sand and not deal with this question.
Yeah,
probably some of both.
Well, that's why people have financial advisors. Detachment. Yeah.
Yep. So that said, those are the pros of having a financial advisor. What are the cons? Well, the first three are fees, and more fees. I mean, they love themselves some fees. The one that I had prior to a year ago, because I did fire my spoiler alert, I did fire my financial advisor. He charged a 1% assets under management, which is a very typical fee, but had me spread over 19 different actively managed mutual funds, 6 bond funds and 13 stock funds. Those ranged from anywhere from 0.35 to 0.78%. So that was in addition to his 1% fees.
Do you know what he gets paid from those?
He
gets
claimed,
paid like 0.1 for each of those.
I asked the question. He claimed he did not get paid by the mutual funds.
Well, maybe that's true today, but when I worked at Oppenheimer Funds, that was why all the brokers and everybody called us.
Right.
And my dad was a stockbroker, and I know they made a lot of money on mutual funds.
Yeah.
Totally.
But when you stack those two sets of fees together, you're talking about upwards of 2% of your portfolio. And it's not a one-time fee. It's every year. His fees I could actually find if I got a good shovel and dug in their website, like I could see them. The actively managed mutual fund fees, just they're invisible. So you never see this money disappear from your account.
Yeah.
You certainly never write a check. It just kind of goes away.
Yeah.
So fees, big thing.
Yeah. Go ahead, Bubs.
And that 2%, I mean, you start compounding that annual 2% and fast forward 15, 20, 30 years, it's an enormous sum of money. And, let's just say we're talking about $1 million. I'm just going to use round numbers. I'm not trying to say what any of us have or don't have or whatever, but math is easy on $1 million.
I have 100 million. Just use 100 million.
100
That's
million?
what I have. Yep.
Well, I did the math on 1 million. So you multiply it by 100.
Belcher could buy us today, both of us. We'd
But
be his.
a $1 million financial portfolio at 2% is 20 grand a year. Every year.
Yeah.
Yeah, it's
The
actually
market
your
does
biggest
great,
expense.
20 grand. The market does really great. Next year it'll be 25 grand.
Yeah.
The market does pour, 20 grand.
Wow.
Yeah, and
So
even if
it's-
it's only 1%, it's still 10 grand or 15 grand, depending on how the market does, et cetera.
Right.
It's a lot of money. And that money compounds every year because you have to count. They took that 20.
Yes.
What was that 20 going to be worth in 20 years?
Yeah.
Right.
Right. It'd be worth 100
Yeah.
grand. Yeah.
And
Yeah.
it's never what I've found. Well, what I hear and what I did find with my one was that it's never really the 1% because they don't charge you 1% and put you in a bunch of free Vanguard index funds because that looks silly, right? They don't look like they're earning their 1%. They put
Yeah.
you in this complex mirage of 19 mutual funds so that you think, wow, they're really sophisticated.
Yeah. Yeah.
So that's when you get above the 1%.
Yeah.
And then if you do know what you're doing, you mentioned earlier, Mark, that the barrier is a good thing, is that you have to go ask somebody for your money and you can't do emotional trading. Well, if you do know what you're doing, it is a barrier. It's a step to get through to get to your money. So depending on how comfortable you are with managing your own, it's either a pro or a con, the same thing of them being a barrier.
Yep. I got rid of them because it was hard for me to buy, large blocks of cocaine and stuff. It's just
That's why you had the Bitcoin, Mark.
Yeah. Exactly. That's why you invested in Bitcoin. Exactly.
Yeah, that's for my cyber, hacking. Yeah.
So, like I said, I did a little bit more than a year ago, fire my financial advisor and have been managing it myself. And, when I did it, I looked at all of the major brokerage houses, Vanguard, Charles Schwab, Fidelity. They're all very good. To me, it came down to which is the easiest to navigate through their websites and their apps. But they're all really good, and they all have an excellent selection of low fee index funds.
Or no fee.
Yeah.
I mean, like in most of those, you can do a total market fund that's everything in the market weighted, right? And it's 0 fee.
Yep.
So you're getting the entire market and you're not paying anybody a dime.
Yep.
And there's numerous funds like that.
Yeah.
And I remember, Kurt, when you were going through that decision, it literally took you 6 months, a year to make that decision. Like from the first time you thought, I really should be managing this myself. I'm pained by how much I'm losing in fees every year.
Yeah. For me, it came down to, we inherited an advisor from my parents.
Yeah.
I had used him just out of no bandwidth when I was working. Yeah. And then it came down to, I did have those struggles for a long time of this is money that's just being wasted. And I was a wuss. I didn't want to make that phone call and say you're fired.
Right.
Actually, it didn't go. I expected it was going to go poorly. I wrote him an email. He called right away. He was very gracious. The email I wrote him was very gracious of thanking the family for helping the family for decades, and I was just going to go out and do it on my own. But it did not.
He made so much money on you already. He didn't care. He already creamed you.
His BMW was already paid for.
Yeah. Thanks, Kurt.
All right. Yep. Yeah. All right, Kurt. So, hey, I think Bumps just saved us 20 grand a year. That's awesome.
Maybe.
Gave us, and maybe also gave us a little bit of heartburn as we've all got to make those decisions. Either way, we need Mark to bring us home on the human side of all this. So, Mark, we're going to segment 3 on your mark. Tell us a little bit about 1,000 weeks, energy, and what really matters.
Yeah, so most people don't think about it like if you watch, or read a lot about, retirement, et cetera. Most people have a 4,000 week life. And you always think about it as like, 80 years or whatever it might be. But if you think about it as like 4,000 Saturdays, it doesn't sound like that many. You know what I mean?
Yeah.
So when you get to 58, where Chad and I both retired around that same age, you have, from 58 to 78 or 60 to 80, whatever 20-year, it's 1/4 of your life left. So you have 1,000 Saturdays left, right? Sounds like a lot, I guess, but not really, as far as if, most people our age know how fast time goes now, how fast a year goes. So they're fleeting, and they're definitely finite. And from 60 to 80, knowing that I have, and Saturdays, I just picked that because people always think of Saturdays being the best day. Once you're retired, every day Saturday, so it doesn't really matter.
7,000 of them.
Yeah, that's right. But the point being is, how good are, so at 58, my Saturdays, my every week is pretty good. I can still hike, bike, ski. I did a bunch of flips on the trampoline today. I went bungee jumping earlier in the week. So, I mean, you can still do everything at 58. But at 80, I mean, is your hike like just the Mesa Trail up at Chautauqua, and you can only do it up, like a mile? I mean, it's just weak sauce, right? So, I mean, you really got to consider like 60 and 70, those 500 weeks are really important. Yeah. So why would you wait to retire until you're 65 or 67? When I was doing the math on my retirement, I was looking at if I work another 2, 3, 4, or 5 years, it does not impact. It's a law of big numbers. At the end of your time, I can't impact Social Security anymore. I mean, it's very hard. You've worked a long time. You've made your money. You can impact it a little bit, but it's hundreds of dollars maximum. And then you really, even saving 401ks for another couple of years and maxing it out wouldn't do that much. It doesn't do that much in the greater scope. You have to start living. And so that's, it's got to, start living while you have your health, while you have your energy, while you can still create new activities that are meaningful and new relationships that are meaningful. And so I think that's why I retired early. I had a buddy who died early, who was, he was dying for like 20 years. And actually on the back of his tombstone, it actually is engraved and it says, "See, I told you I was sick." And so the point being is he lived in a thought process of live every day as if, used to get hit by a bus, Kurt. Right now, somewhere, somebody just got hit by a bus and they're done. And their family's devastated and, blah, blah, blah. But that person, if they would known that they were going to die that moment, what would they have done with that day? You can't do it literally like, because I'd be skiing every day with my very best friends if I was living truly what if. But to live in the present and make it where you cherish that you only have 1,000, really 500 good Saturdays left, right? That is the way you've got to look at it. That's all I got to say about that.
We've all talked about, Belch, like that we all want to be intentional. Like what we don't want to do is go, wow, there went another 10 years and I really I can't really remember what I did or, it's like, I think all three of us recognize enough to where we actually realize, hey man, someday we're going to die. And so we need to be intentional. We need to like,
I just read this stat that is really good. It's, did you know the mortality rate is 100%?
It's undefeated.
They're 100 and 0, right? Yeah, no.
But also, Belch, you mentioned you're not going to make much impact on the financial number by working another year or two.
Yeah, right.
But in the last 2 years, I was living, let's just say, pretty unhealthy, and I may have. Who knows? I could get hit by that bus tomorrow. I could have a heart attack. Anything could happen, but you can start to focus on your health too. I have time now to work out every day.
Totally.
And work on cooking healthy foods and.
Yeah.
So
you got into Whispering Pines. That was really important.
Super helpful. Super helpful. He doesn't have to think about anything. He's got the nurse that does everything. Yeah.
Get the Neuralink jacked into my head.
Yes. No, wonderful. Hey, man. Awesome. All right. From the long game of life to the loudest, wildest, most unpredictable team in Colorado. Guys, we're going to talk about CU football. Prime's real test. Can CU build a culture or just a roster? Belch, you and I have had tickets to season tickets the last 3 years. I know there's things you've loved about Prime. Obviously, he brought some energy back to the program. But obviously this year obviously has been a setback. And how have you taken that in? Is your sense like, no, Prime had a strategy of swapping the team out every year, and that's a lose-lose proposition ultimately? Or do you think he's competitive enough to learn about this and move into a new era where he really does build a program?
Yeah, I think it's possible. I think that the climate of college football just sucks, and it's ruined. And it's not. NIL. I don't begrudge players making money. I think they should have been making money all along, and how that's done is another topic. But I think that the transfer portal being open twice a year and not knowing who's on your team anymore, and everybody playing for the number on the back of the jersey, not on the front of the jersey.
Right.
I don't know the roster at CU. I could probably, I have season tickets for 40 years. I could name 3 deep in the 80s and 90s.
Yeah.
Today, I can name 6 players, right? And that's just, it takes the fun out of the game. I think Prime is a walking contradiction because he's the most conceited, humble person ever on the planet.
Right.
And I'm truly, he is humble and at the same time incredibly conceited.
Yeah.
So it's really hard to listen to him. It's like, yeah, you're the greatest, and I know that yeah.
Right. And
but
humble. Yeah.
I do think the real problem with CU, they've had decent talent the last couple of years. I mean, they have 5 players from the last 2 years, wide receivers, playing in the NFL right now. So they had some really good skill. I think it's the coaching I'm more concerned about. Like, you can't just bring guys from Jackson State and hire your friends. And, gold jackets don't make good coaches. I just think, and that's not to say Marshall Faulk can't be a good coach. He might be an amazing coach, but it's just not the criteria most people look for in a coach is, how good you were in the NFL. So I like watching, I think it was the Georgia Tech game where, we got the ball back with 1:10 to go and had 3 timeouts, had to go 90 yards. And we only got 3 plays off and we ended the game with 3 timeouts in our pocket. Like, that is bad coaching.
Yeah.
On any level. I mean, I could do better than that.
Right.
In that moment.
Right.
Not calling the plays. I'd know to call timeout is my point.
Yeah.
It's just some really bad coaching. I'm interested to see how it plays out. But it's the other thing is, like, you have Cal going to, all the way to North Carolina to play a game. Like, you have these stupid conferences now where all the rivalries are ruined.
Yeah.
It's just they've wrecked it. They've completely wrecked it. I'm just watching pro pickleball now. It's a way better sport. Mostly mixed doubles.
I'm into it.
Over 60. Yeah.
So,
I think he has
so
Go ahead.
Bumps, before I let you jump in, do you guys think is Prime actually the right guy for this new era of college football, which it is all about promotion and commercial success? Or at the end of the day, does culture always come before? Like, if you're going to have success, culture has to come first. Bumps, do you have any thoughts?
I think Mark, I think you hit on he is a contradiction. Like, he celebrates the portal and how he was able to bring CU was horrible the year before he got here.
Yeah.
I mean,
Kurt's a CSU
just-
fan. Let me just point that out.
Right.
But they were historically bad.
They were.
They were bottom
like,
5 team in
yes.
Division 1.
Right.
Bad.
Yeah.
And he got him on national TV every week.
Yeah.
And got big name talent to come in, both playing and coaching.
Yeah.
He made it very cool to be a CU fan.
Yeah.
Sold out every game, home and away. Every game sold out.
Right.
Yeah.
Right. So
That's
is that the
traditionally
era we're in, and we just need to accept it?
that's what he's good at. We'll see if he's good at building a program.
Yeah.
I mean, he's not Saban, right? He's never
Right, no.
shown to be Saban.
Yeah. Yeah, totally.
They're both on the Aflac commercials.
That's a
So
good
they
point.
do have
Bosh.
a duck in common.
Yeah.
It's
No,
a duck,
right.
right?
No,
Not a goose.
that's a great point.
It's
Like, right.
Aflac.
And I think the dichotomy of who he is like also representative of the dichotomy of what is even required now. Like, you need someone that's like very business minded, very promotional, can pay players, can, you know what I mean? It's not necessarily X's and O's that win, but it seems to me it still requires building programs. Like, no matter what, you can't escape that part of it.
Yeah.
Right. He was able to go on Travis and Shador for the first couple of years to go, we can win some games. These two guys are amazing.
Yeah.
And we can win some games just on them.
Yeah. Yeah.
Yeah. They had a lot more talent than those guys too. Like I said, there's five pro
Yeah.
receivers that were the last 2 years. But yeah, I think, you know, even look at Dabo Sweeney at Clemson, who was considered one of the best coaches in the country, and he did not embrace the basically the transfer portal,
Right.
and he's gonna, you know, he's gone. And so
Right.
I think it's who can adjust and swing with it, and maybe Prime's the right guy. I don't know. It doesn't look like it at the moment, but we'll see what next year is.
Yeah.
So yeah.
No, I completely agree.
Yeah.
All right, guys, we need to wrap this up. So thank you. Amazing podcast. You know, we learned a little bit about the market. We learned a little bit about how to handle your financial advisor. Like, what are the pros and cons? And we learned a little bit about life. Like, how do you start to segment your life, particularly once you retire? Can you be intentional? Can you, make a plan that's actually fulfilling and really takes advantage of what might be your last 1,000 weeks of your life? So anyways, guys, great podcast. And of course, the bus.
If you don't get hit by a bus.
If you don't get hit by a bus.
Yeah.
Yes, that's a great point.
Could be 1 week.
And then, of course, Prime. But all this is yet to be seen. We've got to let life play out. So anyways, thank you, guys. Amazing episode. And we will see you folks next week.
See you at the movies. Oh, sorry.
Hold up.